Hey traders, welcome to Charts and Coffee. Happy Monday morning, everybody. Hope everyone's ready to get into this very last week of February. We've had a exciting week here. We have a number of our new Sector Secrets Mastery members embarking on week number 2. So if you're one of those folks listening in, imagine everything that we covered last week, including the entries. We'll cover those when I see you all in the room. Not to mention, end of month is always an interesting time. Not quite as raucous as end of quarter can be, but certainly we're going to keep an eye on some of those end of month tendencies. Again, tendencies are not trades. So when we talk about, there's my charts. I was wondering where my thinkorswim charts were. So when we talk about trades, we're really very much focused on the outperforming sectors, which is why I've got this shot of Koifin. Love this service. Don't know the folks there, but a big fan. There is a free version you can use. That's what I'm using here right now. If you're managing a longer term portfolio, this is a very cool site to use. Just a fan. So that's what I'm using here. A lot of folks ask, Rob, where are you pulling up these normalized performance from? Koifin.com. If I take a look at what is leading the charge, it's any wonder that we're seeing the NASDAQ and the S&P at the top of the leaderboard, if you will, and why the Russell languishes, right? It has to do with the sector weightings, right? We're going into F1 season. And so now we're thinking about motors, we're thinking about cylinders, we're thinking about, just performance. It's impossible for an index to perform if the heavily weighted components within it. So think S&P. What are the 3 things we need to know about the S&P? Tech, financials, healthcare. When those 3 are firing away, when they are clearly strong, when they're working together, it's just like, highly tuned, well-performing motor, right? Now, let's take that same idea down to the IWM or Russell futures. KRE, at the very bottom of the list. I won't say it's impossible because clearly something could happen, but let's talk about what's possible versus what's probable. A lot of folks start to hang their hats on what's possible, right? But not what's probable. It is improbable that the Russell is going to keep pace with big banks and the S&P or even the Dow when KRE is not just the weakest of these important high concentration weighted sectors, but the weakest by over 2 times 2, right? And that's why it's languishing. Now, when we want to start, and the brain wants to do this, I get it. It's flawed, but sadly it's repeated a lot. No index leads another. It's the sectors that when behaving in the proper way, think of it as a formula, a little bit of this, a little bit of that. When you get the formula right, that index can move. What's the formula for the S&P? Typically XLK plus XLF. You put in a dash of XLV, right? Tech, financial, healthcare, and things are going to start to fire. Now, when it comes to the NASDAQ, clearly NVIDIA, one of the magnificents, is SMH is taking everything higher. XLC is right behind it. So then the back of our mind, we're thinking, all right, we've got SMH, that's NVIDIA. We've got XLC, that's Meta and the Googles, right? You move down to XLK. That's not really Apple. That's mostly Microsoft. But when those sectors are up near the top, it's impossible for the NASDAQ not to at least remain supported. So think about why things are where they are. And it's not just the individual stocks, but it's a sector weighting within those indices. Understand that, and why things are moving the way they're moving makes a whole lot more sense. And you're not having to guess at it. You're not having to follow someone talking about leading and lagging indices or whatever else, or that dollar or that bonds dictate where stocks are going. Those 3 factors have been wrong for over a year. So let's at least look at what we're hearing and whether or not that actually maps out in the data. This is why we've been able to find trends in the mastery, really calm trends. I don't mean, supercomputer or whatever. I'm not even trading that thing. I mentioned that yesterday in Top Tier Outlook. I'm not even trading this thing. Don't have to, right? Because if we look at trends, we look at outperformers, look at that trend. I don't know about you all, and beauty is in the eye of the beholder. I'll take a very nice, calm, affordable C over whatever that is. All right. Good for anyone who's been doing this. But what do you think is going to be a repeating pattern? What do you think is going to be a stock we'll be talking about 6 months from now. And I know those of you that love SMCI, go right ahead and keep loving it. But what I want to introduce is maybe think about stocks that are heavily weighted and indices that are outperforming or sectors that are outperforming and the reliability, right, of something like a GE. This is my SMCI, right? So those are things that we can think about, maybe shift a paradigm on, and hopefully that'll help those of us who are looking to build a really stable approach to watch list building, right? And in that way, we always have our pipeline full of opportunities that are not reliant on something having probably a once in a lifetime type move. Yes? Okay. All right. So with that being said, let's get to it. Good morning, good morning, good morning. All right, can we take a look at Apple? All right. Yes, editor. Apple is one of those stocks that I would love to love. So if I think back on the way Apple responded to the watch announcement, um, that was a pretty well received product announcement that helped Apple gain some steam. We're not seeing that with the Vision Pro. I mean, obviously, it's a completely different price bracket. Now, you might say, Rog, why are we talking about products? That's usually sort of the kickstart to Apple's Heart Motley Crue reference at 9:07 in the morning. So if we take a look at where Apple is, there's 5 magnificence. There's 2 maleficence, right? Tesla and Apple, not so magnificent. The daily price movement range, now that we've somewhat convincingly got above the 200 again, it's okay. But I got to tell you, this is where I ask myself, of all the things that I could do, I've got money sitting in my account. Of all the places that I could put my hard-earned money, that you could put your hard-earned money, is it going to be an Apple? Granted, a rising tide should lift all boats, but I'd sure as heck rather a boat without a broken bilge pump. You know what I'm saying? This boat's taking on water. I don't necessarily hate Apple. Just on the list of things that I want to buy, it's probably down near the bottom. So is it nearly oversold? Yes. I mean, if we're talking purely the setup, I love it. Let's build out what this setup is, and I'm happy to show you all. Are we bullish? Yes. Is it a neutral environment? Also, yes. Do we want to focus on the daily price movement range? Also, yes. So that's your 3-part setup. Boom, right? Structure dictates strategy, and then we confirm it. That's it. That's it. All right. Structure dictates strategy. That's it. What price do I want to buy it? And then do I have the confirmation by way of the secret squiggle? I do. And it's literally a secret squiggle. Okay. So yeah, I do like it. I do like it. Editor, thanks for the question. Yeah, I think a lot of folks are wondering, hey, what point do Apple and Tesla get with the program? Please remember, Tesla was not even remotely getting with the program all of last year. So things like Apple and Tesla, be careful. Be careful. All right. So next up, Jamal asks about Diz. Oh, we love Diz. So I don't have any skin in the game in Apple, not as a current trade. I have positions in Apple, right? So I want to be totally upfront, but I don't have a current trade going on. Who doesn't have Apple in a portfolio, right? I mean, I don't hate the stock by any stretch. It's just not a trade. So if I take a look at Diz is pretty much where we left it on, as you could see here on from last week. So we do have an open position in Disney in the Sector Secrets Mastery. Like I said, if y'all remember from last week, a big part of what I wanted to do is, and I'm going to get some t-shirts made up that say, I hate earnings season, because I do. I don't want those outsized, ridiculous moves. Even Disney, that just bugs. Disney's in an uptrend. It was before earnings, or at least it was in the bullish hemisphere, and it still is. But this hole in the chart doesn't help anybody, right? I guess, but the algos and whatnot. So I do like Disney, but it's kind of tricky because we have this great big hole that we call a gap in the chart. But as long as the daily price movement ranges are holding, as long as I've got green structure, clearly it's bullish, it's in the bullish hemisphere. That's what got us long Disney, and I'll stick with that trade. But I'll tell you, there's just nothing that earnings adds in terms of quality of trend, of clarity of price action to the price chart. And I just really quite openly hate the season because it just creates volatility where there doesn't need to be. And I was talking with the guys on Benzinga last week, and I said, I remember, some of you probably do too, It's been about 20, 25 years, but we just got an envelope in the mail that told you earnings per share and revenue. We just went on with our lives. Earnings season has really disrupted, especially the longer term flow of a chart, and not for the better in any way. And then traders who delude themselves into thinking these are risk controllable opportunities, it's a coin flip. And if you want to reduce your trading to a coin flip, have at it. But I think you're better off flipping quarters and than guessing at which binary exponential move we get out of earnings. It just bugs. I know. Raghee, tell me how you really feel. Can we take a look at Natty Gas? Absolutely. I've been waiting for Natty Gas to get with the program. Crude oil finally is. Natty is not. So here's what I'd say. Ren, Natty is still weak. Crude is starting to get some swagger, right, in its step. That means it's going to help XLE and OIH. But XOP, which is oil and gas explorers, could be tricky. But CL is going to be the better energy for me. But yeah, if you want to short something, Ren, yeah, it's not a bad place to look. But in an environment where we're getting a dovish pivots usually do accompany economic optimism. In an environment of economic optimism, it's hard for me to be bearish things like crude and copper. They're the two canaries in a coal mine when it comes to economic optimism. American Express, Bo, absolutely. We've been in and out of this thing 3 or 4 times in the mastery now. I want to continue. Again, I'm not playing whatever the stock du jour is, whatever it's having some big move, or I'm looking for things that we can just quietly, peacefully, can we be peaceful, boring traders? That's what I want to be, right? I don't need to be kind of going down the rapids when I'm trading. I went tubing in Georgia one time. They just put you in that tube and they send you down the river. I think I even had a nice iced tea. Nice sweet tea. That's what I want my trading to feel like. A sunny day, a nice hat, a sweet tea, and a lazy river, right? But some traders want the rapids, and that's okay. But I want this. This is great. This is sweet tea and a nice lazy river. And ultimately, if I'm looking at American Express, what it has been doing, yes, volatility, the gift that keeps on giving. Look at that gray zone. When the green meets the gray, right? That's been our battle cry. When the green meets the gray. And I'll just have to wait for the next opportunity for where the green meets the gray, right? Green and gray. And so if I can just put that on repeat, like, a favorite song in high school, we're good. I just got to wait for that opportunity. All right. Next up is, do I consider selling? Do I consider insider selling? I would love to say yes, because it sounds like something that would be useful, and it probably is. But I really don't. I'll tell you, would it be helpful to know? Let's say I know that there's insider selling coming up. It's always something that we're going to know after the fact, right? Just like what hedge funds buying a stock. I gotta presume, and I don't know why I pulled up X and not Amazon. Sorry, X. I got to presume that whatever is known and not known about a stock, that volume, volatility, and price do know. So I think a chartist, I wouldn't even consider myself a technician, right? I think chartists believe whatever we do and don't know about a stock is built into price. And I do believe that to be true throughout the 3 decades plus of my career. If this isn't an uptrend, maybe that creates a little bit of a pullback, but I want to buy pullbacks. So I really don't. Not that there's any harm in it, but if you do know it, please know that that's not a sell trigger. That might be a pullback trigger. That might have already been factored in. So please make sure, if we know these sort of peripheral bits of information about a stock, that we still need to take that information and pair it up with a setup. And so if we can still go about it with that kind of discipline, I can't see why it wouldn't hurt, right, X? All right, Microsoft. Microsoft is no longer the trend it was. In fact, tech is getting a little toppy. One of the things I talk about in Top Tier Outlook is if you're worried about toppy tech, if you're worried about exponential, parabolic lunacy in tech, I get it. I still want to be a buy the dipper, but maybe a little bit more conservatively so. And keep an eye on S&P, financials, healthcare, industrials. But that being said, do I like Microsoft? Notice how the daily price movement ranges do adjust, right? On this way down, not once. I'm just making sure I'm not missing that. There we go. Not once have we hit, maybe on the 13th, but that was right before dividend date. We're not going to buy right before dividend date because we tend to pull back by the dividend and then some. So we're waiting for a pullback to the gray, and that happened on, well, take a look. That happened on Friday. The low was 408.97. So and it actually still didn't really hit it, but got within a nickel of it. So that's about as close as we've had to a pullback buy. And we are now oversold, which is important because once we lose the trend, I'm going to use a secret squiggle to let me know what's overbought or oversold. And ultimately, you can see there that it wouldn't make sense to continue with the buy. So I'm with you. Is it a trend? Is it a trend following entry? No longer, no. But it is bullish, right? We can have choppy bullish environments, and this is definitely choppy bullish. All right, XBI. So if I'm looking at XBI, a couple of things that I'm going to look at when I'm looking at XBI is number one, what are the stocks weighted within XBI? Is it bullish? It's in the bullish hemisphere. It's above the 200. It's above the 34 EMA wave. It's above the Darvitz. It's mostly green grab candles. I need a pullback, but I would treat this the same way that I've been encouraging folks who've been asking me about Meta to treat Meta, right? Kind of similar, right? Up and then sideways. When you have an up and sideways move, what you have is bullish compression. Listen up, traders who love to trade the squeeze. This is really an ideal environment for something like this. Bullish compression by the oversold support. So let's take that to XBI. Right? Bullish, absolutely. And then not as good at compression as Meta, but that Darvitz gets the job done. The closer we can get to this area that's just below 90 to about 86, the better. So find the lower half of this compression, buy calls in there, because then what that does is it gives you the at least choice to take a little bit of profit out around the 94 level, right? And then see if we get that momentum kicker. And that's the way I like to do it. I don't want to get in at that momentum. A lot of folks probably got in on Friday and then they need higher highs today. I would hate to be there. That's like trading out on the edge of the tree limb. I want to find that opportunity maybe in the middle or lower half of that zone. So it gives me a little bit more play in terms of sitting through this sideways action, because that sideways action can last a while. So imagine you buy the breakout like some folks probably did on Meta on the 15th, and now you're running out of time on your option, right? That theta decay, that time decay is eroding the value of your premium. At least by buying near the support level, you've got a choice to get out at even a small realized gain at the upper end of the range, right? And I'll say the same thing about XBI. If I buy momentum, I've got very little latitude to handle anything but higher highs. That's a terrible place to be. But if I buy in the lower half, I've got choices as theta decay continues. So those are things that we can think about in terms of bullish compression, right? And then if you got a squeeze in there, for those of you that use that, cool. To me, front run the momentum break. That's going to give you a lot of choices. And the Darvitz is a perfect tool for that. All right. That Darvitz 2.0 or 3.0. So there's some process there. Hopefully that's something everyone can put to work on those bullish compression type markets like XBI or Meta. As always, gang, thank you so much for being here for Charts and Coffee, Caffeinate, and Dominate, gang. I'll see you all tomorrow, same time, same station. Be good to each other.